Hello, everyone. My name is Joe Savino, Regional Manager for American Financial Network. Thank you for participating today, especially you've come out to learn a little bit about what AFN is all about, what I am, what's going on in the markets, and how I believe AFN and I can and I've been able to put them into sheets of paper here, and we'll go through them. In typical, we're into this, what I call a recessionary market, because it truly is. When you get down to it, there's 5 economic indicators that state if you're in a full-blown recession. And all 4 of them are hit right now. The one of them that is missing, and that's why we won't get any relief by way of at least interest rates, is unemployment. Unemployment is currently low coming out of coronavirus, but where all economists are talking about right now is towards the 4th quarter. That 5th is going to flip the switch, and we're going to be in a full-blown recession. So we do expect interest rates to tick down a little bit. Okay, how much? Your guess is as good as mine. But a little recap on myself. I've been doing this since the late 1980s. So kind of aging, I'm aging myself. Yes, I know. That's when I came into the business. I've been through 3 economic downturns. And I guess if you can say this, I've lasted the test of time. And there's really only one way you do that and stay in this business for 33 years. Honesty. And you got to be the hardest working SOB out in the field. It's the only way to do it. Got introduced into the mortgage business through my brother. When I graduated college, he owned a public accounting firm, and he, went to him, and I says, "Hey, I'm doing these interviews," and he goes, "Okay, well, go interview." And then I interviewed with him, and he had the best offer out there. So I said, "Great, 9-to-5 job, perfect. It's great for me. I love it." And it was fine once I graduated college. The thing that got me into the mortgage business was I started doing his booking records for his mortgage company. So I'm seeing these large checks come rolling in, and I'm like, looking at my salary, and I'm looking at these checks, and I'm like, I'm doing something wrong here. What am I doing? So I asked him, and I says, "Hey, how you doing this?" He explained, he was in real estate, and he was in mortgage banking, mortgage brokering. And I said, "Well, how do I get involved in this?" And he goes, "Well, one thing, that 9-to-5 job you could forget all about." He goes, "You want to do this business, you're 24/7. So 33 years later, 24/7. So letting you all know that if you ever need anybody to contact, whatever, you want to run a scenario through, you want to call me up, you need me to talk to one of your clients, which I'm hoping to get at the end of this, I'm 24/7. Not kidding. I was on the phone at 9 and 9:30 last night talking to clients. One thing is, since we're all in the real estate business, we're kind of busy when the normal 9-to-5ers aren't busy.
Yeah.
So we've got to keep ourselves available all the time, and that's why that phone rings 24/7. So, okay. Kind of explained a little bit about myself. I've owned my own company for 15 years. I've been doing this for 33 years. I was a head underwriter for 10 of those years, direct endorsed underwriter for FHA. I keep very sharp on the guidelines for underwriting. So it's a tremendous advantage for my clients and for the realtors that are using me, because guidelines are constantly changing. And I was also, just to rewind a little bit, 5 years ago, I was a licensed realtor. I haven't practiced in 5 years, but it just lets you know that I went through everything that you guys have went through. The testing, the CPEs, the fees, and then most importantly, carting clients all over God's green earth, trying to find them homes. In this market, it makes it a little bit more challenging, especially with the cost of gas. Now, I know when I was a realtor, the thing that I hated the most was I get a client a house just to find out that their pre-approval wasn't worth the way it was written on. I mean, it was literally, you could take that pre-approval and throw it in the toilet. Now I've showed the client 10 properties, and all this time I was wasting my time. So nothing burned my britches more, and understanding what you folks all go through on a day-to-day basis. So we're in this marketplace. It's highly, highly competitive. I'll go through some statistics, everything. I'll just give you the numbers. I'm not going to harp on them. Everybody knows where we're at as an economy. But one thing I'm here to do is how to improve your chances and your client's chances win those offers. Okay. In order to make it in this place, in this marketplace, you got to differentiate yourself. Okay. You're doing the same thing over and over again and getting the same results that you don't like. Well, that's ludicrous. Okay. That's called insanity. Doing the same thing over and over and over again, getting the same results, and it's not the results that you want. So you've got to differentiate yourself from the marketplace. And one thing, and I'm going to save that kind of for the end, I'm going to show you exactly how to do it. And that's with my help. Okay, my help, my experience, and what AFN is all about and what they can do. So, little bit about AFN. If you guys want to open this up, it's American Financial Network. They are a multi-billion-dollar company. They have over 200 branches nationwide. I'm one of those branches. I'm out in Lockport. They have over 1,200 employees nationwide. So basically, they're hired to an army size. Okay. I am able to originate in all 50 states, as well as Puerto Rico, and full wide array of programs. So one thing why realtors love working with AFN. First and foremost, national strength. We have a local presence here. The underwriters and the processors that I deal with aren't sitting in New Jersey, California, Texas, Florida. They're right here in Illinois. They're right here, Homer, Glen, and Lockport. So we know our markets better than anybody else. The size and the strength, like I said, national strength. Last 2 years in a row, 2020 and 2021, over $13 billion originated single-family residences. So it lets you know the size of the company. A top 50 mortgage lender has been rated by the National Mortgage Press. One of the things that we do, I believe, better than most is our lifeline with our strategic partners, our realtors. Our marketing department is pretty outstanding. Gentleman by the name of Michael Fleming, him and his team. You have an idea, social marketing, print marketing, mailer, most of the stuff's already done, and we could show you a shell and then introduce you to that. You've got an idea, let me know. I'll get us on a three-way with his team. They'll design it for us. They'll put it out there. Okay, something pretty unique. And that's one of the reasons why I particularly like AFN. Okay, flipping the page. Stop. Another great thing that the company has. Our claim to fame is really our speed. And I'm going to tell you all about an 11-day closing process that we do, and I do this quite often. Okay, it's one of the reasons why I'm going to be able to help you win offers. Our communications throughout the whole system, it's all integrated in our processes. As soon as you see a loan that we originate and it's yours, you're entered into our system. It tells you, hey, borrower took RESPA, they already took application. So you don't even need me to send you a text or get on the phone, hey, we got the application running, blah, blah, blah. Automatically does it. Your loan moves into processing. You know that as well as the client. The loan moves into underwriting. You know that as well as the client. It's all automated. Loan gets an approval. You know that, so does the clients. Everybody that we enter in the system, whether it could be the attorney, the buyer's attorney or whatnot, everybody's kept completely informed. All the way down to when you get to clear to close. Hey, congratulations. And then you see my pretty little picture come up on the screen. Congratulations, you're now approved. Okay, or you're going to close. So the communication steps is huge. Instead of you know, hey, what's going on with my client? I haven't heard anything. What's going on with that mortgage broker or banker? It's been 2 weeks. I haven't heard anything. 3 weeks. You know, crickets right now. Don't have to worry about that with our systems. It keeps you completely informed. Okay, flipping the page. AFN strategy. partner focus, operational excellence, lending distinction, mentions here, agency direct, term times 24 to 48 hours, broad range of loan programs. Probably one of the things that brought me to AFN a little bit over 6 years ago was the programs that they had. So they're agency direct. So what's agency direct? You're doing your standard conventional Fannie and Freddie. You're doing your FHA, your VA, your USDA. All of that's done internally through our underwriters. We also have an arm of non-QM programs that are underwritten inside the company. Okay. Beyond that, we have 110 broker relations in this country. That's 110 other lenders that do all of the niche products. Okay. We're going to cover some of those niche products and the ones that I have decent experience on, but there is so much out there. So one thing when we're going through this, I want you to remember, if you come across some type of scenario and, you know, it could be just you're not getting an AUS approval, you're falling just outside the guidelines. Don't fret, call me up. There's programs out there. Okay, there's a lot of them, believe it or not. With the market constraining as it is, okay, we all know the originations are lower, sales are lower, prices are up, interest rates are up, blah, blah, blah. You're going to see more and more of back of what I experienced in the 80s and 90s, where these large companies, these hedge funders, they're looking for ways to make money. So what they do is they expand the mortgage products. We remember all back when the whole market blew up in the 90s and everything, the 125 loans, the 100% financing stuff, the cash out FHAs at 96.5. Well, and that was part of the federal government. We're starting to see this already. You're getting higher loan to values. The differences between then and now is we were lending back then to, you know, doing stated incomes through W-2 borrowers, which was stupid because you know what the W-2 borrower makes, a lot different than a self-employed borrower. Self-employed borrowers, we all know, you're making more money than you're really showing. It's the truth. It's how they all do it. Most of them. You're going to see a higher FICO. We were lending to FICOs, you know, given 100% loan to values with people down to a 560 FICO. That's a big credit challenge right there. Someone has a 560 FICO, they're bad credit, and yet we're giving 100% loan to values to them. That was back in the 80s. You're not going to see that now. So you're going to see those higher loan to values at 90% for people with the 720, 740 FICOs. They're out there. No income verification for those. Yes, they're out there. We're going to cover a couple of them today. Okay. As I mentioned, agency direct pre-approvals. We're going to spend a decent amount of time at the end on this. And it's with this, I'm going to show you how you guys can differentiate yourself from the rest of the market and give you a strategic advantage. Okay. And it all goes hand in hand with that 11-day close process. Okay. Meeting deadlines is big. You're dealing with the mortgage company. They have to be able to hit deadlines. You got the mortgage contingency on the file. You got to be hitting that. You have to be in communication with the listing agent, the attorneys, whomever. Deadlines are huge in the mortgage business. They're huge in the real estate industry, as you all know. Okay. The marketing aspects. I kind of touched on this a little bit earlier. AFN's got a unique way to helping out its real estate partners, from a huge catalog of flyers, folders, mailers, flyers that you put up, brochures with your open houses, to actually getting involved in your business. And like I said, our team getting involved in helping out with your social media. Okay, they're used to that. That's what they do. So you could imagine with, I think we're running with 800 to 900 loan officers countrywide. They have that availability. It takes a little bit of time to do that. So if you're thinking about that, you've got an idea, let me know. It's going to be a little bit of time, but we can get it done for you. I can guarantee you that. Okay. Co-branded marketing tools. I just mentioned some of that. They're really nice. Folders, mailers. You want to do a mailer hit? Let me know. This stuff is all easy to create. We do co-marketing. We split the expenses. You want to do something? Let's do it. I'm all about that. Okay. More products, more home sales. Okay, as I mentioned, the standard convention, the standard agency type files, FHA, VA, USDA, conventional Fannie Freddie. We also offer a complete reverse mortgage program. You've got clients looking to buy homes, they can do that with a reverse mortgage, believe it or not. Okay, 203K renovation rehab. We do all of that. It's actually one of my specialties here with the company. We do everything with the renovation loan, including VA renovations. I heard once talking to Adam that someone says that at AFN we're not doing VA renovations. Yes, we are. We broker them out. In fact, the VA renovation is better than the FHA 203K and the conventional home stock. We've got a program that is no closing cost with a renovation loan. It's tremendous. It's a great program. Okay. Niche programs, we're going to cover this: asset-based lending, construction to perm, which we just rolled out, investment properties, DSCR type loans, non-QM programs, bank statement programs, DPAs, down payment assistance. We are providing those loans. Considering where the market's at, their rates are fairly substantial with those, with the DPAs, but do them pretty consistently. There's probably not a month goes by that I don't have one or two closing. So in their right place, they work very well for clients. Okay. And you can do those on both conventional and FHA loans. Okay. So just giving you a quick review of why realtors love AFN. Okay. Gonna flip over to the right side, the program overview, cover some stuff here, give you a little bit more idea of some of the marketing. So flipping over, top 10 reasons: simplified processes, desired loan products, successful growth, accessible applications. We now have a handheld application online right on your phone. You press the button and you're applying. Okay. When I send out an email, attached to mine is apply now. Clients can go right in there, click, and just start typing everything in. I'm a little bit old fashioned. I like to engage the client, speak to them, get to know them. Computers to me are a little bit impersonal, but we do have millennials out there that prefer to do it that way. So we could do it both ways.
Hello.
Hey, Jackie.
Hi. Oh, hi, Jack.
Yep, you can sit here.
Okay.
Hello. Fantastic.
Sure.
Flipping over the next page, going into a little bit about renovations, the fixer-uppers. Just covering something real quick on an example: a $325,000 purchase on a property, tons of potential. They're actually going to put in $127,000 in renovation. Okay, appraisal comes in over cost, so the appraisal's coming in at $452. It all covers. The borrower's doing this loan with 3% down on a Fannie Mae home stock. Okay. We could flip the switch and go to FHA, and you can get up to 115% on the value with a renovation loan. You could do those both on refinances as well as purchase, as well as VA. Like I said, the VA renovation is very, very strong. It's a great program. It's probably the best one out there. Okay, and like I said, we could do that at no closing cost. Okay, these files are a little bit different. Everybody runs from the renovations. Oh, they take too long. They're too expensive. Well, yeah, you are dealing with the construction loan, so there are more costs. They don't necessarily need to be longer in the process. Two critical aspects. Okay, for one, we have to get the client pre-approved, but you got to get the specifications of repair, and you got to get the contractor quote. And the contractor quote's got to be in its right format. You give us those two pieces of information, that's a normal file process, just the same as any other FHA or conventional loan, and it applies through. We've closed loans with, we've closed full renovation loans, $250,000 renovation within 30 days at AFN. So it is very much possible. What lengthens it? You got the client wavering. Well, I was going to do that. Now I'm going to change my mind and I'm going to do that. I'm going to flip contractors in the middle of the whole situation. This creates a ton of problems. Okay. Does it happen? Pretty much all the time. But you get used to it.
Question, I've done 2 or 3 Ks. I've had 2 clients in my experience so far. Do you have a list of contractors? 'Cause I think that's one of the biggest challenges.
One can be provided.
Okay.
We do in this area. The whole country, no, but in this area, we know some good contractors. We can put you in touch. Our biggest key is we can't just send you to one.
Yeah.
We've got to give you a list of them and then have the client choose. Okay. As you can imagine, we do a lot of renovation, especially even here in the Midwest. We're on a first name basis with pretty much every HUD consultant in the area. So I could pick up the phone, they're on my speed dial, and I could talk to them and get their information and their influences and ask them questions if there's an issue and have them interface directly with the client, which is who a HUD consultant does work for. They work for the client. Okay. Not going to go too much into that, but you've got a lot of good information here. Now we're going to kind of cover some of the non-QM programs, non-qualified mortgages, those that aren't going to meet the standard conventional type guidelines, nor FHA. So as I said, the last thing we're going to cover is brand new programs that just hit that are at higher loan to values than what you see here on these. These were part of our marketing material. So these new programs just came out literally Monday. The Alt-A programs for non-QM type borrowers, self-employed, or even ITIN, we're going up to 85%. So 15% down. These are also available in 12 or 24-month bank statement. Client has to be self-employed, but you could use either business or personal bank statements. We even have a program that you mesh them both in. So you got a client, well, not a lot of clients, they're small business, Schedule C type clients, and they don't have a business bank account. That's okay. There's programs for that. Okay. Agency fallout, I mentioned earlier, stuff that isn't going to fit into the nice box of conventional type loans or even FHA. These are called agency fallouts. Got a ton of programs for that. 1 day out of bankruptcy, 1 day out of foreclosure type loans. Okay. Available for pretty much all product streams, single family, multi-units, townhomes, you name it, condos. No income verified asset type programs. We have those. Cash out refinance is available on all of these programs. Like I said, we're just going to briefly go over these flyers at the end, or the paperwork at the end really has the nuts and the bolts, and they are great programs, and I've closed a couple of them so far. Once again, nationwide portfolio lending. We can close loans in every state. That includes Puerto Rico. For all of these programs, I'm not just talking conventional, I'm talking the non-QMs. Okay. Recently, 22 days, start to close, one of my I-10 loans, 737 score, 15% down, closed in 22 days. Okay, so once again, heavily relying on the speed and the efficiencies within AFN and our processes. Okay. Asset ready loans, no income, no problem. They have no income coming in, but they have a lot of assets. There's a calculator that we use. We plug in all the assets. It calculates the amount of income we could use. Now we get people qualified for a loan. And on this format right here, I put John's handsome picture with my ugly Photoshop, but this just tells you a little bit of something that we could do on any one of these flyers at any time. Okay.
Hey, Joe,
Yes.
do you think you could go over an I-10? Because I think some realtors have never done an I-10 loan. or
Sure.
purchase
Sure.
When you're done.
Okay. Yeah, absolutely. So we all understand what an I-10 is. People that don't have a social security number or technically came here illegally. Okay. It's okay that they're using a false social security number. It's inherent with the type of loan program. We're going to run the social security off of the I-10 number. Now, I've seen this happen because I've done a number of these where the client's got a lot of credit, but it's under the fake social because they have to come to the country and they have to provide their employer with some sort of social security number in order to start working. Okay. So where it's hey, this guy's a banker and he's talking about fake socials. Well, I'm being honest and real. That's what the program allows for. Okay. So we run the credit under the ITIN. Now, sometimes that ITIN number doesn't have their credit. Now you got to start at the bureau level. Now you've got to take all of that credit. You have to get it onto that ITIN. Okay, it can't be done. I've seen it done. I've helped clients get that done. It takes some time, a lot of patience, but it can be done. And now all of a sudden that ITIN number has all of that credit.
Wow. I didn't
Okay.
know if you did that.
Kind of weird, huh?
Yeah. Can I ask a question regarding ITIN? So if I have a few clients that are interested in rehabbing a home, but is there any type of program that you have with that would allow someone with an ITIN to rehab a home?
Not a renovation. Okay,
You know, these people are hardworking and they can do their own renovation.
I thoroughly agree.
Can't do that one out of it.
Well, I
I
know,
thoroughly
right?
agree.
Okay. What's a mosa?
On the renovation side, no. But on your straight purchase or even cash out refinance, yes. Okay. So recent closing, self-employed borrower was a renter because they couldn't use their tax returns to qualify for agency grade paper. Okay, they purchased a $536,000 home because they showed enough liquid assets to cover that. 75% loan to value, no income verification, no income whatsoever, just verified asset. That's your NEVA, no income verified asset. One of my loans. So as I was mentioning, with the tightening of the marketplace, you're going to find these monolithic hedge fund lenders starting to create these new crazy type programs, increasing the loan to values because they're looking to make money. Okay, this has happened time and time again. Once again, like I mentioned, back in the mid to late 80s, those programs all started rolling out, and then the government came busting in and shut down everything, and now we're starting to see this come back. It's cyclical. Okay, so for everybody that's jumping off the buildings, there's no housing out there. I can't find clients' houses. Interest rates are going up. Everybody's going crazy. It's cyclical. You're going to see it come and go. This isn't going to be the last time. It's not the first time, and it's definitely not going to be the last. Okay, you heard it here first. We are going into a recession. You're going to see the interest rates tick down. And I'll mention some more stuff a little bit later. You're finding housing is becoming more expensive, not only from the cost of the house, but the cost to procure the mortgage. And there's a reason why. I'll cover that in a little bit. But the biggest thing, what I really want to be here and talk about is this 11-day process, how we do it, and how your borrowers can take advantage of this by winning more offers. Okay? How many in here is just strictly listing agents who just, okay? I didn't think so. You're strictly listing?
Pretty much.
Okay.
Try to be.
Yeah, well, everybody tries to be. A listing agent right now is great. You got no worries, okay? Problem is, there's not a lot of houses for sale. And how many people here have probably got a dozen borrowers already pre-approved and you can't find them homes or making offers and just getting thrown right out or losing contracts all the time? That's what I thought.
Yeah.
Okay, I see that happening with my realtor base as well. And we've not necessarily created it, but I went into this new system where we're not just going to get you pre-qualified, and we'll cover what that exactly means as it's defined. We're not going to get you pre-approved. We're going to give you a conditional loan approval through underwriting that is subject to two things: the appraisal and clear title. And that's how we close within 11 days. Okay. What does that entail? Your borrower's got to engage. Okay. And for more reasons than one, this is a full-blown underwrite. Okay. Nothing could potentially come up unless, from the time that we gave them the conditional loan approval, 60 days later, they lost their job. Well, can't help anything like that. Well, Joe, you gave them a conditional loan approval. Well, it's also subject to rechecking income. And if the credit report gets old, 120 days, because we're having to repo clients' credit all the time now. Okay, you're subject to that change as well. That's just common sense. Okay,
Right.
credit reports last 120 days, so you've got clients with a pre-approval out there, and you're hitting that. I tell you, even 60, 90 day. I'd love for you to take them back to me, but take them back to the lender. They're going to have their credit repo. Because once again, the worst thing imaginable is having you folks run around out there with the cost of gas and your borrower's not approved. They were once approved, now they're not. Things change. We're in a changing environment and it's changing very, very fast. Okay? So we are now going to cover a little bit about the marketplace, how inflation impacts everybody, including the lenders. Okay, so all of the talk from all your economists, and you hear on the news and you hear on Fox Business, this was all transitory inflation. Okay, well, it's not transitory, it's here to stay. Okay, we're seeing the effects on the housing market. The housing prices go up, the interest rates go up, it's more expensive, all in all. One of the reasons why not only the housing market is more expensive, but to procure and to gather a mortgage is more expensive is the compression of the margins. What's the margin? Margins are what lenders get paid on, the loan officers. That's how they get paid. When that compresses, there's only one thing for them to do, and that's technically to charge points to clients. You get on your lower credit grades, and I sent this to a realtor just the other day. I analyzed 3 of our brokers compared to our in-house lending. And where before there were no hits to an FHA loan to a 640 score, now they're charging points on 660. So between the tranches of 640 and 660, where there was never one before, they're now charging borrowers to get any of their programs 1 point. 3 different, the first 3. You go from 640 to 620, you're paying 1.5 points. You're going below 620, borrowers are paying 2 points. Okay, we've never had that before. The reason is the compression of the markets. Anybody ever hear of Barry Habib?
Yeah.
MBS Highway? He explains this to us. Okay, if you get a chance, look him up online. Very good speaker. But he's mentioning as things compress, one of the reasons why he gives you for that compression is the recessionary environment that we're living in. These banks are smart. Lenders are smart. The pseudo-governmental lending agencies, FHA, VA, they're smart. They know that interest rates from where they're at right now are most likely going to tick down come that fourth quarter and first quarter of next year. Well, okay. What they don't want to do is allow companies to charge such a high interest rate that in 6 months, guess what? These clients are just going to refinance right out of that loan. Think about it. They're losing tons of money now. So what they're saying is, we're going to give you a decent interest rate, but we're not going to pay you for it. Okay, going back to why at those lower FICOs, these companies are all charging points. Guess what? That's the only way that they can make money now, because the margins have compressed in the industry. Give you a little bit of a history there, what exactly going on, some education. So this flyer that I put together here kind of mentions that. What is inflation? We all heard about it. Well, it's a decline in a borrower's purchasing power. Has everybody heard the term purchasing power, what it is? Okay, it's the amount of money that a person makes that allows them to buy a home. As their purchasing power goes down and the cost of the homes go up and the cost of interest rates go up, that same client that you had pre-qualified for literally 30 days ago doesn't qualify now. Okay. When I work up my pre-approvals and my commitments, my loan commitments, realtors typically come to me, well, I go, what are they trying to afford? How much are they trying to afford? And a lot of times, well, they just want to see what they can afford maximal. And then I go, okay. Now, there's a learning curve with that. Okay. I'm gonna get them approved, let's just hypothetically say for 250,000. You're gonna go out there and you're gonna show them $250,000 houses at all list price. We all damn well know you're not gonna be able to get that property for list price. Let's be realistic here. Okay, no one wants to waste each other's time, believe me. So it's an education, a little bit of an education, where I tell them, I tell the clients straight up. I go, and your realtor should be telling you this also. You got your proof for 250. Don't go looking at properties for 250. You're gonna be wasting a lot of time. And that's what I'm here about. We don't wanna waste time. Okay? You need to be looking at homes in the price level about 230, 235, because you're gonna have to increase your purchase price over list to be competitive out there. And until this housing market cools off, that's the market that we're in. Okay, so you gotta calm down, their expectations a little bit. And in the long run, they're gonna appreciate it. Okay, because you're giving them knowledge of what's going on. You're giving them real life influences, what's going on in the marketplace. It's gonna do you no good. Hey, I go to work with Ruth, and she showed me 5 properties, and we put in offers at $250,000 on all of these properties, and we lost out on every one. Okay, because you're looking at $250,000 properties, because that's the maximum you're approved for, but you're not gonna gain that offer. You're not gonna get it. Okay? Yeah, I'm talking about the 80-20 rule. You may get lucky. You've got a property somewhere out in the far, far south, and, part of that 20% where you get lucky and you roll the dice and you win the offer. Maybe there was 2 offers. I'm talking about the other 80% where you're competing against another 20 to 25 offers on that same property. And it typically happens in the city and in the suburbs. Okay. So it's the 80-20 rule. Definitely not telling anybody their business. I'm just telling you what's working for us right now and the realtors that I'm engaged with.
I don't understand that. If they want to buy something for 250, and you're saying to get approved for 230.
No, I'm gonna approve them for 250.
Yeah,
But I've gotta educate my client that it's not realistic that you're gonna get a house. If you're looking at listing prices for 250 and that's the maximum you could offer, that you're actually gonna win that offer. Okay, now I'm gonna show you a way how you're gonna improve your chances, but let's be realistic. Anybody here that has a client that bought for less in the last 60 days?
no.
Everybody's running around, chicken without their heads on out there. There's reasons why. Okay, we're not using this, we're not using our noggin, and we're not educating our borrowers to what's really going on out
Because
there.
they're bidding over.
Right, everybody is.
They're bidding over. So if I'm taking you out and I'm writing all these offers, your eyes are bigger than your pocketbook.
Yes,
That's the bottom line.
yes.
It's a good way to hear it.
And it's true.
I had a stupid rental listing, and I had someone offer more than the asking rental price.
Mhm.
Yeah, I get that too. Yeah.
They're all doing it, yeah, for
For rentals,
everything,
yeah.
for everything.
Okay.
I had a rental downtown Chicago. And we got it for $200 a month less. And it was a $1,900 a month. But she took a 3-year lease. So he gave it to her for $1,795 a month. So it's negotiating,
Right,
but she could afford it.
got
Same
some
thing with the homes.
interesting news, interesting information here. So what do borrowers do in the meantime if they're spinning their wheels, they can't find properties, they're priced out of the market? Well, some borrowers, probably the best thing is they have to wait this thing out. The problem is, where do they go? Well, they have to rent. Here's the problem. Rents have increased more than what the home values are going for. Okay? Rental prices for single family homes grew at an average 7.8% in 2021, an all-time high. Okay, according to CoreLogic. US home rents jumped 12% year over year for the month. This is in December, 12%. Miami leading the way with ridiculous amounts of rents at 35.7% increase.
Wow.
Okay, home values have been increasing lock and step, 14% year over year. January, Average home price, $354,750. For one, I would love to know where those homes are. That's not my lending average. That's a lot of coastal properties out there. Okay. That's according to Redfin. Now, active listings just recently, last few months, fell 29% to an all-time low, 438,000 listings countrywide due to the tight supply. People are worried. Why aren't they selling? We're in the spring, we're in the summer now. People should start loosening up. What's going on? It's the fear factor. People are afraid of what's going on with the economy. They're so unsure. You got the war in the Ukraine. You've got runaway gas prices. It's all builds into the fear factor. Well, great. I would love to sell because I'm going to make a killing on my house, but where do I go then?
Right.
Okay, what do I do? Okay, you're called a contingency, right? Okay, one of the things I first try to do, because I understand the market, is can we get you approved, and how much can we get you approved for without selling that home? Trying to get them to go in without that contingency. Okay, taking a lot of stress off of everybody. Okay, you're talking to a borrower. Oh, so I've got to sell my house at the same time I'm going to buy a house, and I have to get all these movers lined up, and this is all predicated on the mortgage approval. And if everything gets done at the same time, yes, that's what happens. Stressful. Okay. Once again, you better meet those deadlines. So, mortgage payments, of course, increasing at the same time. All-time record highs right now, an average $1,877 due to the higher lending costs and higher asking prices. That's an average, $1,877 a mortgage payment. Once again, I'd love to know where that number comes from, because I guess people don't understand about the real estate taxes in the city of Chicago.
Right.
Be that as it may. You were just mentioning the cost of renting going up. 2 months ago, young lady by the name of Nicole found me online, called me up, started communicating with her. She wanted to get pre-approved, and I'm like, well, why? What's going on? She lived in Arlington Heights. She was renting. Her rent went from $1,500 a month to $2,400 overnight, $900 increase. At this point, she starts thinking, she goes, I gotta be able to get a house for $2,500 a month. Sure thing. $350,000 purchase price, 10% down. Her payment is $2,559. Principal, interest, taxes, and insurance with mortgage insurance. So instead of her throwing money away for pretty much that same price, they could now buy. Okay,
But she had decent credit.
Yes. she had good credit. Okay, there are people still out there with good credit.
Well, and, I mean.
We are gonna talk about that also.
Well,
I'm
you're right.
gonna help you out with that one too. Okay. The bad news, mortgage rates jumped 1.5% in the last 3 months. That's the highest climb in 28 years. Doom and gloom, right? Everybody's jumping off of buildings right now. What are we gonna do? How are we gonna pay our bills? Okay,
Well, it's just, I mean, they're not gonna qualify for as much because amortized over 30 years, it can't be all that dramatic.
it truly isn't, as we were explaining and talking, and that goes into the purchasing power of what the client can do.
Right.
Okay,
The lower the interest rate, more they could qualify for, you know, so.
okay.
If the rates go up, it.
Some more interesting information. The pressure to contain inflation will grow. How do you contain inflation? Get increased interest rates. It's the only way. Okay, the Fed will have to raise its interest rates 8 to 10 times per quarter this year. They've already started. We've already been through a couple of them. Okay, they're calling for a lot more. Okay, it's going to put pressure on long-term interest rates. What are we going to see back? See, I'm used to this. What's going to come back in the mortgage industry to get people qualified? ARMs.
Oh, God.
Lower start rate. You can qualify at that lower start rate. Lower interest rate. Get you more purchasing power. It's going to change in 5 years. The ARM change in 5 years. Okay. If anybody asks me if I think that's a good bet or a bad bet,
It's not like a graduated payment mortgage.
there's also those that are available, GPMs out there. I'm just talking about a straight 5-year arm.
You're talking about been doing innovative stuff now.
Right, going back, thank you. There's a man that's been doing this for a long
I'm
time.
not as old as you, all right?
I understand that.
Yes, you are.
Oh, Lordy. Okay, experts forecasting 30-year interest rates, 8%,
Wow.
That's what I heard.
3 years.
So do you recommend arms?
Put him in the spotlight.
Yeah, thank you.
Weren't you about to say
Thank you. Well, in their right place and time, yes. I won't project interest rates into the future. I won't ever do that. If I can do that and I can do that with accuracy, I damn well wouldn't be doing what I'm doing right now. But you've got a young couple. Here's the difference. You got a young couple or you've got a professional just starting out. Well, you know their income's going to go up. Okay. You've got a fixed income borrower going into an ARM. Not a good bet. It's not a good play. So yes, in the right, proper place and time, yes. Okay. Kind of gives you a recap of,
But you're talking 8% going up to 8%. in 3 years. What these young people don't understand is that back in the 70s, the rate was 15 and 17%.
I was around there.
I was too.
I did some research for this meeting. And honestly, I can't remember them being this high, but in the late 1980s, when I started in this business, 10% was the average interest rate. Now, I could remember wholeheartedly doing ARMs at 7.5% and fixed rates at 8.5%. Problem being, we're dealing with millennials. They've seen this little blip since 1976 when we started tracking interest rates and mortgages and all of that stuff. They've seen this little blip of 2 to 3% interest rates and they think that that's normal. And believe me, I get calls from them all the time. What's your interest rate? We run everything. Yeah, you're 5.25%. Oh, that's too high. Sorry, nothing I can do. And I simply take them, I go, hey, this is a real easy way to check it. You can go right online right now, plug in where you want, guaranteed rate, see where they're at. I did that same thing this morning, 5.25%, 30-year. Okay,
They publicize the rates, all different places. You know.
I'm not here to sell interest rates. I never did. I'm here to get people into homes.
You know, a quarter
Put 'em in the
point
best
here and there.
possible product.
Change the mortgage.
Right.
All that much.
It doesn't. It doesn't. And, rates are changing every 30 days.
Yeah, I heard
I
that
mean,
too, that
it's-
they're gonna go up to about 8
Yeah.
gradually.
So if you've got, and this is my warning for you, just be smart realtors. If you've got approvals out there and they're over 30 days old, get back to that lender and requalify your client. I've been working literally 12 hours a day just because, and I'm not talking necessarily all the new business, but I have to go back and requalify my clients. And I'm telling them what the truth is. So, worst thing, no one wants surprises.
No.
I even hate birthday surprises at my age right now. So,
So if we write a contract, we gotta write in there 2 discount points in the contract, right?
you don't
Just
have
to be
to.
safe.
No. Check with the lender. I mean, what do you
But
guys,
if you're saying that lower credit, like
Yes.
1 credit and
Yeah.
1.5 points.
yeah, you're gonna be,
We should be safe and
And put in 2%.
put in
yes,
there.
ma'am. Well, you do mortgages, you know.
So explain how that works for everybody out in the cyberspace. Yeah.
She's like, I'm not gonna do
Why
it.
not? You just,
So
you know
you've
what
got
you're
a-
talking about.
You've got a borrower and you're putting their terms on the contract and you know that they're a lower FICO, so you know that they're VA, FHA, or non-QM. Well, technically, non-QM really are, well, they can go down that low. You want to write into the contract, a point or 2 points discount into the contract, because that's what the borrower is going to be paying. Okay. So that they know, but they should already know from their lender what they're going to be paying. That should be no surprise. 0. Okay, that should have been discussed way up front. All right, so Here's the big one. This is what I'm here to talk about,
Here's the big one.
okay? How you guys are gonna win, and gals, you're gonna win these contracts. Okay? There is a difference between a pre-qualification of pre-approval and a conditional underwriting approval. Big differences. Pre-qualifications, it's verbal. A client calls you up, gets you the information over the phone. A lot of times I'll be engaged with the realtor, handing the client off to me. I'm talking to the client on the phone and I'm explaining to them, okay, within the next 5 minutes, we're gonna find out if you're pre-qualified. What does that mean? That means that I ran an income check for you. I know your FICO, okay? I'm gonna find out what you could basically afford based upon verbal information that the client's given me. I make $20 an hour. Okay, you working full 40 hours a week? Oh, yeah. But the problem is the borrower worked full 40 hours for the last month. They were on part-time previous to that. Guess what? You're not using 40 hours a week at $20. That comes through the analysis of it, which you technically do in a pre-approval state. Okay? I'm going to know their FICO. You're going to know their FICO as a realtor. That's really it. So I'm going to let them know, hey, verbally right now, I'm going to know their assets. Okay, got $20,000 in assets. Okay, well, they didn't tell me that it wasn't in the bank and they took $10,000 of mattress money and then put it in the bank. You don't have $20,000 of assets. Okay, that's going to get blown out in any arena. Okay, so we're going to know right away. That's within minutes. Okay, now what I'm going to do after that, so it's not to be used as an approval. Okay, it's not, and I told the buyer, I got you pre-qualified. All right, Jackie, find me a home for $250,000. That's what I'm pre-qualified for. No way. That means nothing. Okay, and I tell the clients that carries very little weight in the real estate market, as I've written right here. Okay, it's merely an income check. Now, from the industry and for what I'm looking at, yeah, I'm looking at a credit report. Well, not a lot of people even have the intelligence in this mortgage business to read a credit report. They're not looking and they're not seeing, if there was any collections out there, if there's any accounts in dispute, which is a problem, could be a problem. If there was a prior bankruptcy out there, a lot of people aren't looking at that, at least on where the bank comes in and you said, well, you'd be saying, well, that's kind of like 101. Yeah, it is. But it's not 101 to a lot of people working up mortgages in this business. So the next step after that is the pre-approval. That's where I'm sending the client out a detailed list. And that list, and it's not only these documents, it's going to be last 30 days pay stubs, last 2 years W-2s, last 2 years tax returns, any type of business tax returns that they have, Social Security, pension, disability award letters, anything along that line, assets, what type of assets? I'm collecting 2 months bank statements. I'm finding out about their 401k, okay, which you could use for reserves, 65 and 75% of which, depending on if you're going FHA or conventional. Once again, not trying to geek everybody out, but that's the underwriting background.
IRAs?
Yes.
That also the same thing? Okay.
Very much. It's similar to a 401k, it's just how they're holding it. Okay. We're going to get all that information in and we're going to analyze it. Okay. It's with that, we're going to ask for more questions. It's with that we have a pre-approval. Hey, guess what? We got a pre-approval. Okay. Now I've seen a lot of pre-approvals in the industry. And the one thing that worries me about that I'm going to make you guys aware of, a lot of them don't even have an AUS number on there. Does everybody understand what an AUS is? I know Jackie does. I know Adam does. Okay, great. An AUS is an automated underwriting system. It's the AUS. That's for all agency loans have to be run through. Once again, what's agency? Fannie, Freddie on the conventional, FHA, VA, USDA. They're all run through there. Okay? They have to.
And they put it on the pre-approval. I never noticed it, but.
Yeah, well, they should.
They should.
Because it gives you a level of, hey, it's been automatically approved, which is better than just a pre-approval because people are putting pre-approvals out there, and not running it through the AUS, just to find out from the AUS, it's not acceptable. Or I would have told you before with probably 99% accuracy, 3 years ago, if I seen a credit report with a FICO score, I knew exactly what it would be approved for. They have tightened up on the lending requirements extremely. And I get nervous when something, I've got a loan in process and something changes and I'm like, oh my gosh, they're gonna have to rerun the AUS on this thing. That's how tight the mortgage market is. That's how stuff is changing so fast out there that we worry for a reason.
So you suggest.
That's why I'm losing all
look
my
for
hair,
that AUS
or
on
have
the
lost it.
That's why I
pre-approval.
lost them.
Yes.
So
So,
find that on there.
Yeah,
thank
More
you.
credible.
Thank you.
Yeah,
Okay.
I didn't know that.
So you'll see on mine, whether it's a pre-approval, it has that AUS. My pre-qualifications are at least run through the AUS. Granted, it's all verbal. I don't have any documents to go on, but I do that. I take it to that level. Because once again, I don't want to be wasting time and neither do you. Okay, so if the client doesn't conform and we can't get them approved, could be for a myriad of reasons. Could be that credit, okay? There's things that we do, we run them through, and I'll cover this in a little bit later, but we run them through FICO simulators and we work with them on their credit. I got a whole drawer of clients I've been working with for a year. One client just recently, Ron Weiss, Lawton, Oklahoma, look back on his first credit report I pulled. It was a year ago. It was May 21st. Okay. Came to me with a 508 FICO. I must have ran a dozen FICO simulations where he was working on his credit and continued to do it. Then we run the FICO and it, because his credit's changing all the time. He got up to a 687 score. Okay. Gave him a pre-approval, took the pre-approval now, got him an underwriting commitment through VA, 100% down. Got the contract last week, took the application 2 days ago, closing in 30 days. That took a year. That's what it's going to take with some of our clients right now. And once again, Adam and I, we stood the test of time. There's only one way to do that. Okay. You have to work for your clients. You have to give it 100%. You have to give it 120%. And they got to know that you care. And they damn well know that you care if you've been working with them for a year. Okay.
I've worked with people and longer.
And you've got a lot of companies out there that, hey, they don't approve, they're not, then the loan officer, whomever the bank just doesn't deal with them. I love those clients. They take time, yeah. I'm a personable guy. I like dealing with people. That's why I got out of the accounting business with my brother and I got into the mortgage business.
But
Well,
it's rewarding.
yes, it is. But in this day and age, it used to be where, the realtor and the bank, they were completely separate. You can't be successful in this business without joining hands and having one graduated rollout to the borrower where everybody's on the same page and saying the same thing. Like I mentioned, hey, I told my realtors, we can't just pre-approve this guy. We got to get him underwritten. Okay, Joe, what are you dealing with now? Well, I still don't have any assets. I can't get him a commitment if I have no assets. I've got credit and income, which the pre-approval says. I don't have any assets. Give me the assets. We can take a look at everything. And I tell the clients throughout the process, there's 6 months now, clients going in and out of houses, still can't win it. I tell them, you got to send me updated bank statements. You've got to send me updated pay stubs. I got to keep your file updated. Okay. So, differences between the pre-approval and the conditional underwriting commitment. Okay. Couple things. The big thing is, guess what? It's underwritten by someone else other than myself. Fully capable of underwriting the file. Super. Run it through the AUS. Great. But when we get to that conditional approval, there's all of these other crazy reports that a mortgage bank runs, okay, that you don't get on any pre-approval. I will guarantee you this, no one else is doing this, okay? Couple things are run. There's a thing called Fraud Guard, okay? And that's exactly what it is. It runs a detailed analysis, and the Fraud Guards run about 30 pages each. And guess what? When you're underwriting it, you got to go through every page. It goes so detailed to examine any type of deed that that borrower ever had. It's gonna show that. It's gonna show me who the borrower's father and uncle is. It's gonna show me who their cousins are. That's how in-depth it goes. It's gonna show me every property that they ever lived in.
Named associates.
So guess what? I gotta ask these borrowers, okay, I've got this property here and I got this property. Do you own them? Did you ever own them? Yeah, I own it. Okay, well, you would think, okay, it's not in the credit report. Well, why isn't it on the credit report if they own it? They own it free and clear. Okay, I got tax returns. Why isn't it on there? They're not showing rents. They're not paying the government for the rents. They're not filing their tax returns correct. Okay, but it's out there. Okay, that's gonna show up on a pre-approval all the time when you get to underwriting. They're gonna nail it 100% of the time. Absolutely. Now, guess what? What does that do? Well, Joe, it ain't that bad. So, okay, they don't have a mortgage on it and they're not showing any rent. So who cares? We don't need the rents. Yeah, guess what? There's taxes and insurance on that. There could even be homeowners association dues on that. Guess what? Those get hit to the debt to income ratio. Boom. You now blow up. Your loan's dead.
Yeah, but people, they tend to give you information on what they consider a need to know.
Well, they don't understand what
They
the
don't
need to know is.
Right, they don't understand it.
And you can engage them all day long, but until I get this stuff on a sheet of paper, and I could show them that from the fraud guard. It's an amazing report.
And you said your company is the only one that uses this?
No, all companies are using a fraud guard, but they use it when it's in underwriting.
Okay,
What we want is, we want to take that underwriting, we want to put it up front.
okay.
We want to know,
You don't wanna
lock, stock, and
surprise us.
barrel, our borrowers approved. Okay? The one thing is with this conditional approval, and I tell my realtors this, they're making an offer. Give me the name and the phone number of the listing agent. I don't want to wait for the listing agent to call me, because some of them do, the smart ones do. Hey, how strong is this borrower? They ask real basic questions, but I want to get in that listing agent's face and let them know, hey, I'm the bank. I go, you've got a sheet of paper there. And I'll show you an example of what a conditional approval looks like. Looks like something like this. And it says conditionally approved, and it says what it's subject to. Real loan, right here. This is a real one. Dated 4/9/2022. Okay, you'll also see that the conditional approvals, other pre-approvals are good for 60 days. Well, if you remember, I told you, hey, Joe, why is it 60 days? You said the credit reports are good for 120 days, and you're getting updated pay stubs and bank statements from the client. Why is this only 60 days? I'm putting the other 60 days into potential processing, underwriting, other issues. The appraisal, the property needs work to be done. They have to come back out and do a 1004D, which is a reinspection of the property. God knows. So we leave it at 60. Okay. Depending on where a client's at, I'm refreshing that whole file at 60 days. A lot of work, right? Yeah. Are you working with mortgage professionals? I won't say bankers that are doing the same thing. If they're not, you should be telling them, because you're out there running around, wasting time, wasting this expensive gas price on something that potentially can fall apart. I'm not saying it is, but let's take that out of the equation. Now, what I do is when I'm on the phone with that listing agent, I go, I want you to understand what you have in your hand. This is not a pre-approval. This has been run through underwriting. It's been run through the AUS. We are subject to clear title and appraisal. The same thing, equivalent of any cash offer that you got out there, minus an appraisal waiver, which I think is highly stupid these days, but people go with those. Has anybody had one on their
Yes,
properties?
yes.
You have?
Yes.
Okay. I haven't come across one yet.
They're out there.
I'm against it, but that's the market that we're in. So we've got to put our clients in the best possible light, humanly possible, to win that contract. Okay, and I can tell you it works. I can wholeheartedly tell you it works when we get these people conditionally approved. I engage the listing agent on your behalf and on the client's behalf, and I let them know. All you got to do is provide clear title and the appraisal. We close. We're going to close in 11 days from when I take that application or from when that client says, go with the home inspection. Okay, they're going to pull in a home inspection. Well, that home inspection takes a week. You're not going to tell me now I've got 4 days. I can't. It's
You
not
said.
legal. It's not legal. Okay,
So you're
So,
saying our appraisal waiver is not good?
no,
mean, it's good.
I don't like them because you're taking a property that, yeah, it's underwater right away. Or potentially
With
could
an
be.
appraisal, right?
Well, yeah, because
You're paying more.
you're paying extra over what it's
Right.
appraised. You know, I mean, granted.
You're giving it a waiver. So how that works is your client's offering 250, okay? And there's other offers out there at 260. But your client comes in and says, I don't care what the appraisal comes in at. If this appraisal comes in at 200,000,
How about-
I want that property and I'm gonna put $50,000 down. And then I'm gonna take the mortgage on the $200,000.
I had it.
Okay,
I'm thinking that the mortgage company is waiving the appraisal.
No,
That's different.
That's good.
No.
which that's a good point to bring up. Brand new, you want to talk about stuff changing all the time. There are other things called appraisal waivers on the mortgage
I
side
just had that too.
where, and it'll typically come up when you're doing a rate and term refinance, okay? Where the AUS is run in a certain way that we don't need an appraisal. Save the client the money, you just go out there, you do a rate and term.
Or a
Okay.
large deposit on a purchase.
Don't even, yes, they'll give it on those. They just started. They said that they're coming out more prevalently. They're going to infuse it into the AUS to start giving us appraisal waivers on purchases.
What is the considered large deposit? Like what percentage?
I had one 20% down.
Yeah,
There's-
Typically, they're right around 20.
So
I haven't seen anything less, but you know, what their changes, maybe we'll get them at the 10% down.
the one that I had, she was putting down like 60%.
Yeah.
She was
Yeah.
putting
And
down
you'll get those.
60%.
And the reason why you get those, because you take the MI company out of the scenario. You put down 20%, you don't need MI. That takes out the MI company. You know, MI company's got to approve you. Okay, so you got an appraisal waiver with 10% down. We're going to insure that for you?
Yeah.
That's the problem, but we'll see. I'm telling you, things are going to change and you may see that happen very shortly. Okay, so that's something good. So thank you for bringing that up. But it's that commitment letter. I'm on the phone, cash, or I'm sorry, I'm telling you, my offer's as good as any cash offer out there, title and appraisal. And we're closing loans in 11 days. And that's how the realtors I'm working with are winning contracts.
So I tell my buyer that we can close in 11 days.
And then you can
What-
sell that,
Subject to title.
title and appraisal.
Okay, but this is after she is totally pre-qualified.
Not pre-
Pre.
No, well,
Approved.
your first step is gonna be, you gotta get them pre-qualified right
Like a
away. Unless a
conditional
client
mortgage
sends in all their
payment.
docs, then I could just immediately pre-approve them.
Right.
Okay, then I'm gonna tell them I'm
Same
gonna run the
condition.
AUS, okay? I'm gonna run the
Emergency,
AUS now, and
conditional
we get that all
mortgage
done. And I can tell you, this commitment phase, if I have everything, it's gonna be a minimum 72 hours. So 3 to 5 days to get all of this stuff done, okay? Once this information comes in and we run all these reports, guess what? There are gonna be question marks all over the place and I have to get that stuff from the client. So we're doing a lot of stuff up front. Okay, so you may say, the rest of the industry, this is the way to do it.
Can I ask something? So I know this is just some feedback that I get from some clients, like, why are they asking me for all this paperwork again when I handed it? So my thing is this, do you think this would be like more common now? And then everybody just really does the underwriting ahead of time?
I am seeing some companies do this same thing.
Just as a norm, not so much because of the market?
It may be.
Okay.
No, I just think it's mainly because of the market at this point.
Okay.
I don't think people inherently like to do all the extra work and not get paid for it. You know,
We're used to that.
Yeah.
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 so this is all the work is front loaded. All your due diligence comes up front. Yeah, we know, loss of hair. So, any questions at that point? So it's really up to you. You know, back in the day, clients used to go to the bank first to get approved, and then they went to the realtor. More clients right now are going straight to the realtor, and then they're getting set up with the bank. That's just a change in time. And a lot of times, if I'm the realtor, I can only do so much. I can't, and I'll tell the clients this myself. You're not gonna be able to go in and see properties. No one's gonna waste time with your offer from your realtor unless you're at least pre-approved. So like I said, I'm gonna get the client pre-approved right away. Okay, 24 hours, that's it. Same day I get them pre-qualified. Once I get their docs in 24 hours, they have pre-approval. Okay. They could be out there now looking at stuff, as I'm sure they're gonna want to. Now, it's gonna take me a week to get them conditionally approved, and they've gotta work with me. I could possibly do this in less than 48 hours if they give me everything immediately. Okay, and they're,
And that's the problem.
Yeah.
That's the problem. They
But-
don't give it to you.
once again, it's coaching of the client, and it's gotta come from two people. It's gotta come from the mortgage bank, and it's gotta come from the realtor. It's gotta be a one front conversation with the borrower. Everybody's working the same. Get them this, we're gonna find you a home. Guaranteed, because your offer is worth way more than anybody else's. You've got a $250,000, $300,000 offer. Okay, let's even say mine's FHA. Everybody, ooh, FHA, they don't want the FHA inspection, but the listing agent knows that that house is gorgeous. It doesn't need any scraping and painting. Okay. You get an offer at $300,000 for a conventional, $300,000 that's conditionally approved, subject to title and appraisal only. Guess what? They're going with that approval. They've got a cash offer. That's it. Okay. They've got to provide the collateral, which is the home. Okay. You're not doing an appraisal waiver. They got to give you a clear title. Same as cash offer. And that's the industry that we're in. So we've got to be able to differentiate ourselves from everybody else out there and give our clients something else that very few other people are doing. And what does that mean? You're doing a lot more work. You're doing that work up front instead of getting stone cold deal. Hey, got that purchase contract. Now let's start working on it. Nope. You have to do all of that work up front as if you have that purchase contract already. And that's that conditional commitment. And this is what's winning offers. Very few others are. Okay, questions, comments?
That's good. I came in late. I'm sorry, I had to run around with the LSIP and deal with issues. Did you talk about all your lending your renovation programs?
Yes, we talked about that. We went into that. We even went into some detail and mentioned the VA renovation programs that are available, and great programs, mind you. No fees on those VA renovations.
That's awesome.
There's no lending fees. You've got the construction cost fees, like your HUD consultant fee and your draw inspection fees, but I'm talking lending fees. No underwriting, no processing on some of
Something
them.
that agents could push out to, specific to veterans, of course, but
Surely.
it's a niche
And-
product, and you could, market,
You're looking for-
veterans,
You're looking for the marketing material and you want
Yeah,
nice
that would
stuff
be
like
helpful.
what John's got his picture on there. I could put together all of these. I could put those together for you for down payment assistance loans. I could put them together for you for ITIN loans. You want the no income verification type stuff. You want the renovation stuff. We can do this. We
Do
could
you
put your,
have anything, I need something for VA.
oh yeah,
Just-
we can have that.
I like this.
It's already out there. We already have it. So it's almost, I gotta get you online and then show you all the pamphlets, or honestly, I can pull down the pamphlet, send it to you, which ones you like, get your picture, we put
You're
it out
so
there.
nice.
What about social media? You mentioned earlier that you had social media.
The company's got a social media platform that they hold out to the real estate partners that you kind of tell them what you want to do.
Okay.
And then they help you with it. He's
that's
a
awesome.
social media
Guru.
He's got a team of people that work with him. His name's Mike Fleming.
Mike Fleming.
Yeah.
I can get yours.
Oh, yeah. Yeah. You have
Mm-hmm.
my information on these.
What about bilingual information? Do you know if you have that available?
Marketing information
Yeah.
in bilingual. That's a good question. I don't know.
Probably do. Aren't they California based?
Mhm.
Yeah, I'm sure they do. That's not-
I'm
Stuff's the other way around in
actually,
California.
I know they do because I've seen it with the ITIN stuff
Okay.
specifically. So I know they do. Okay.
That might be
Now,
out there, to
last
sell
thing I wanted to
the
talk
system
about.
a week or something.
This is hot off the press, just came out Monday. All of them Alt-A non-QM type programs that I mentioned at those 85s, as I mentioned, they're gonna come around. 90% loan to values on this, up 10% down. I'll briefly go over these. So in here, the first three sheets, and you see what they're called, Prime Advantage, Flex Advantage, and Flex Advantage bank statement only. Okay, the last one's DSCR, which I'll cover in a couple minutes here. Okay. Just as of last week, and I can tell you this from our in-house non-QM that we do at AFN, where the loan to values were limited to 85%, 15% down on purchases. We've now have the ability to roll them up to 90% loan to values for purchases. 24 or 12-month bank statements. Okay. 1099 wage earner. Could be a 1099 wage earner where you write off everything. You got the 1099. That's the income we're using is off the 1099.
Not the return.
Nope. P&L program. Profit and loss from a CPA. He creates the P&L, we lend on it. What?
I think is that more for self-employed?
Yes, that's self-employed only.
Yeah.
Each one of these programs are self-employed only.
I get a lot of them out there.
So, as you see, well, you're gonna need a 720 FICO, of course, but they're out there. Okay,
They're not pulling 4506s or whatever that.
No.
thing's called, and that
No.
kind of stuff.
no. So this is, now you say, hey, Joe, what about the borrower that's down to 640? Okay, yeah. If you flip the page, those same programs allow you, even I should say down to 620. 620 for the 1099 and P&L program, and then 640, you flip it again, you can go down to 640.
So it's a little FICO score driven then.
Oh, God, yeah.
Yeah, okay.
Absolutely. Yes. Then on the 12 to 24 month bank statements, 640 and can actually even go down to 550 on them.
Is that what?
Is that 550 or 5?
Oh,
550.
Wow, that's amazing.
Flex Advantage bank statement, 1224 a month. 550, 65% loan to value. Okay. So like I said,
Big downstroke.
you know, and you could look at these, some of them have got DTI maximums, but if you've got something and you looked at this real quick, you don't need to go in through, and believe me, there's 4 pages of underwriting guidelines behind each of these. Just say, you know what, Joe mentioned something about bank statement client. I think I got a bank statement client, FICO score is 680, it'll match. Okay, could quickly look there. Okay, so it's 80%. Client, you got 20% down? Yeah, I got 20% down. We got something there. Give me a call. You know, you ain't gotta go crazy trying to look at all of this stuff. But like I said, this was brand new. I couldn't even get it onto our nice little marketing flyers on the nice paper. So I just attached this and brought it here to let you guys know. Okay,
What's
Now-
that DSCR?
DSCR, glad you asked.
What page is it?
Last page. In the last 3 months, I've done 1 a month of these. That's how popular these are becoming. These are for investment property only. No income. Don't care. Don't care about the borrower's income. You get the FICO score with some minimum trade lines, which is probably inherent with the FICO score, not always. 15% down, as long as that property cash flows, it's a done deal. What do you mean, Joe? Simple. You're buying a single family. The rents in the area are 1,800. The mortgage payment's less than 1,800. Buyer buys the property, no income, no questions asked, no nothing.
Wow.
Don't even care if you got a job. 15% down.
And
If
then
you got it done.
this is just a down payment and then the closing.
Sounds like the old days.
Like, around 8 or so.
Scared as a cat.
These are all gonna be inherent with your borrower paying some point or 2 points.
There you have to have tax returns.
On this program,
How do you verify the rental income?
this is only on the subject property. They're looking at the subject property. Now you go on multi-unit, maximum 75 loan to value,
75.
25% down, but no, you gotta believe on the rentals, they're almost always going to, you know, especially you get into, well, I wouldn't say always, but you're getting up into, you know,
If they're paying their rent.
a 4 unit, that thing's gonna cash flow with the rents that are out there right now. Okay,
You could find one to buy one.
Yeah, I
I've been
mean,
looking to personally buy one myself.
yeah, they're
Good.
one of the articles I just had here, and I didn't think I highlighted it, but they were mentioning how tough those investment properties are to find right now.
Mm.
And that was just in the,
I
yeah,
had-
that
I
was-
had more rental properties than in my.
it was just in
20s.
the Scotsman's guide right here. I just read that
Selling
this
hell out
morning.
of them.
So,
2 flats and 3
um,
flats.
Yeah, there are many out there. I've been
Yeah,
looking.
this is good, Joe.
One
This is a lot of
thing-
information.
Another thing I'd like to mention, a lot of, and I called around on this, a lot of mortgage companies are looking at using exiting rents wrong. What I mean by that is, you got a borrower, they own a home, okay? They don't want to sell the home and sell it on a contingency to buy another one, so they say, hey, we're gonna rent this thing out. Okay, can you do it? You could use exiting rents for Fannie and Freddie, your conventionals. You cannot use exiting rents for FHA. Now they're gonna have to qualify regardless with the 2 payments if they're gonna go FHA, or if FHA is all they qualify for. But now we'll switch over to conventional, where everybody is applying out there that if you've got a mortgage history, you could use exit rents to wash the payment. So their old payment was $1,500, they're gonna buy a new one, so you could use $1,500 for both Fannie and Freddie, provided that they get the first month's security deposit, you got a signed and authentic lease, now you could wash that payment. Okay. The true guidelines for Fannie Mae, you can go above that on market rents. So now that lease that you provided, you don't have to stay. Freddie says that you can only wash the payment for $1,500. So you got a payment of $1,500, you can wash the payment for $1,500, so it's like kind of a non-event. Fannie guidelines specifically state that you can use over the property payment to use that as income to buy your new home, provided that they have market rents. And what do you use for market rents? Everybody says, we have to get another appraisal, blah, blah, blah. No. You can get a statement from a realtor, or there are
Hey, how much you want, man?
there are specific websites out there like rentameter.com that let a lender know, hey, is this thing, you know, in the realm of possible, or is it way over here to the right, in the red, where it's not legitimate?
But how is that guaranteed? That tenant could get in there and the second or third month or fourth month, stop paying the rent.
Surely.
It happened.
Yeah,
Yeah.
right, because I mean.
Absolutely.
had that-
Sure.
had that-
Same thing, I give a loan to a borrower, doesn't mean that they stop paying after 90 days. You know,
happens, as they say.
what are you gonna do? I mean, once again, that goes down to, the whole lending industry is based upon risk. That's what everything is. You know, and I've had a realtor, my borrower, whose credit report is clean, but he's got a 640 score, you know, why is his interest rate a half point higher than, you know, something unconventional? Because he's a 640 score. That means that the powers that be consider him a high risk because of his FICO score. Well, one reason could be because he's always using maximum credit trade lines. He's maxed out all the time, he or she. Okay. That's one of the reasons. Maybe he did miss a payment ever, he or she, but they're maxed out. That's a problem. Maybe they just don't have enough credit, but they never missed a payment, but they just don't have enough and it hasn't been established for long enough. The other thing is we're gonna go into a little bit about FICO scores right here. Misnomer. Installment payments help your credit. Absolutely not. They do nothing. They hurt your borrower's credit. Borrower goes, well, I had a car payment for 24 months. Isn't helping your score. Only revolving credit will help your score and a mortgage. A secured loan. Okay. Revolving credit. And I'm not talking J.C. Penney's, something like that, or True Value. You need one of the majors, you know, a Chase, a Visa, right, Capital One. Those help your credit. Okay. Now, I get borrowers in all the time, you know, they just don't qualify, their credit's not up to the grade. What do? I don't send them on their merry way. That's an opportunity for me. When you bring me a client, they don't qualify, they're not leaving you whether you leave them, because I'm gonna keep them very near and dear to me, because I'm gonna work with their credit by running these FICO simulations. There are credit restoration folks out there. Some of them do a good job. Some of them aren't worth their weight in toilet paper, because they just tell the clients to run out, put everything in dispute. Client sees their credit score go up. Joe, I'm a 640 now. Run their credit. Yeah, you're a 640, but you got 10 trade lines in dispute. Can't do it. Okay. Typically, when we're in that level of clientele, we're going to be FHA or VA. You're going to be something along that line. You know, lower FICO score. Even in non-QM, you can ask me, well, some of these non-QM programs, do they allow disputed trade? I don't know. I'd have to go and research it. Okay. This is the 20%. The 80% is your standard types of loan products, but you have to understand them. So what's the guidelines for FHA? FHA is pretty easy. You can have up to $1,000 of disputed accounts. You don't have to take them out of a dispute. Perfect example. 30 days ago, ran credit on a client. He had 5 trade lines in dispute, and this was a client I had 6 months earlier. I didn't tell him to go and do this. I sent him a list of what he had to pay down. He put everything in dispute. Goes back to the realtor go, hey, Joe, he's got, 640 credit scores. He just told me, blah, blah, blah. What made him think that he has 640 credit scores? Not sure, but he had a 640 credit score. He had 5 credit cards in dispute up to $8,000. I said, I can't do anything with him. What's he got to do? Now, granted, you got collections of $8,000. You got to apply 5% of those outstanding balances and hit the client. That's the income ratio with it for FHA, which this client was. No problem. DTI'd out just fine. Ran the AUS with all the disputes. Ran through. I got an accept eligible. Doesn't mean it's going to go through underwriting. It can't. The FHA guidelines are firm. $1,000 and $2,000 of collections. The AUS still approved it. What's the good of the AUS? Well, it's going to give you some certainty, but until you're through underwriting, that conditional approval, you never know. Okay. So what did I do? I ran the FICO simulation with all these accounts in dispute, and I took them each out of dispute, and I seen if it changed the FICO score. It did not. I thought it would, because when you put a trade line in dispute, you artificially inflate its FICO score. It's like it never even existed, even though it's out there. Okay. So what I told them, I said, we're going to have to rapid rescore this. We got to take out 3 of your disputes. We were able to do this. We did a rapid rescore, cost the guy a little bit of money, got it all done, reran the credit. He's underneath $1,000 of disputes now. We didn't need to take them all out. We just got him underneath that 1,000, got him approved. He's now out there looking at houses for $275. Where he's going to find a house $275 in Grand Tool, Illinois. I think they're going to be a little bit cheaper out there, but sorry, anybody from Grand Tool. I shouldn't have said that. But no, I know where you were thinking. Yeah, $275 in the city, no chance, right? But no, he'll find something. But it just lets you know. And I've been working with this guy for a while. So while I told him to go pay down some stuff, he went out and threw it in the dispute. Well, he did pay down. He didn't touch any of the collections, but he did pay down his other credit cards that got him there. And lo and behold, it worked. It took 6 months, but hey, you got to work with people. That's you can't just send them on their merry way. Now there are some clients who, 498, credit score, and I'm like,
Like
you
3 years.
need some other assistance here.
Right, no.
Yeah, you're going to need to go to a credit specialist that's really going to be able to spend time, and they're going to charge you for that monthly. But it's up to you. I could run FICO simulations and work with them all they want, and what if here and what if there, and the things it's got a predictable model in there, so it mimics the three repositories. You know, so it's predictive models. Plug it in and it works very well. It works very, very well. Okay. The thing that works against it is time. The more time it takes a borrower to do what it says to do, the less likely that score is going to come in. Okay. Because what happens? Their credit report's bombarded with all this other information. They ran up credit cards, a medical collection came in, you know, it changes it. It loses the effect, the full effect of that FICO simulation. But I can tell you verbatim, that day I run that FICO sim, that's true. Guaranteed. Okay, and I've done this time and time and time again. You know, one thing I do is, you know, hey, if I run this FICO simulation, and typically it's telling people you got to pay down stuff. Sometimes it's telling them to get off of accounts. You know, they're on as an authorized user of account. And while that person's made all the payments, they're $500 over their max line of credit. And they get off of that, and guess what? They get 40 points just like that. So just one of the other tools that we use and I've used for a long time, and it's very successful. Questions, whatnot? I know we got lunch out there, and grab something. And
We got subs from Jersey Mike.
Jersey, Mike.
Jersey Mike's. So, anything? Questions?
How do borrower, before they get to the loan officer, how do they find out their credit score? Because like the 3 credit checks doesn't have the score.
Yes, they can write into the bureaus and it'll tell them their score.
Oh, they have to write into the bureau
Yeah.
to get their score?
Yeah. Most time people are saying, well, my Credit Karma score is such and such, and I'm like,
Well, they
that
get it from
means,
their credit card. I mean,
yeah, some of their credit cards,
Right.
okay, thank you. Some of their credit card does give that.
Mhm.
You know, they got that Experian boost, which will give you your real Experian score. But once again, you're getting one of the 3. What's a FICO score? It's a generic term for the middle of the 3 credit scores, okay? Or the lower of 2. Can I get loans with only 1 FICO score? Yes, but that doesn't mean I have to go in and put in all 3. So I'm requesting a credit report with all 3 credit scores, and it only spits out 1, and I run it through the AUS and it approves me with the 1. Absolutely, all day you get those done. Okay, but I can't just go in and say, I'm going to choose TransUnion only. You can't do that. Okay,
But at least if they get it from they have an idea.
yes.
Of what their score
Yeah.
is.
Credit Karma, someone mentions Credit Karma and stuff like that, that online, those are consumer based and they're typically 40 to 60 points different than what their true credit score is from the mortgage reporting standpoint. So. Good question. Thank you.
Are there many contingencies right now? People that are wanting to buy before they sell?
Mhm,
I mean, are they really being accepted though?
mhm.
I didn't think most sellers would.
I've got 2 right now, closing in the next couple of weeks.
Today's secretary there.
So, yes, they're out there.
Okay. So I have somebody
Yeah,
that
she wants to get
insists
something
she's
from
gonna buy before she sells.
Well,
Because she feels her home will sell very quickly.
oh, absolutely, the home's gonna sell. fast.
She won't have time.
She gotta find a house, but once again, you know, you gotta let the agents know you're dealing with a contingency here.
Right, oh, exactly.
So we're gonna close simultaneously the same day. You know, we'll wire funds from one title company to the next. Do it all the time.
I don't see a lot coming up on the MLS as far as contingencies.
Got a few of them. But the key is, once again, the whole reason for this meeting, one is to meet everybody and to let you know about AFN and what we do and what I do. Really that 11-day close process and getting the clients conditionally approved up front. And then letting me engage the listing officer with you, the listing agent, and explaining to them what exactly does that mean. Now, you could tell them that. And then if they get another phone call from me, they know it's legitimate. And I will call each and every one of them.
Yeah. You
'Cause-
remember the offers where the LO called you?
Yes,
You remember which ones you talked to the
Yeah.
loan officer, don't you? Yeah.
last month, out of 20 offers, mine was conditionally approved. We were the 3rd highest. And the agent called me up and she said, congratulations, your client won this. And she goes, I want to let you know that you weren't even the highest. But you had your client conditionally approved. You actually called me and I told my client this information. And I felt real good that all we need is title and appraisal and we're closing in 11 days, and I'll be damned if we didn't close in 11 days. Just like that. It stresses out the hell out of the system and the processors and me, but yeah, do it all the time, honestly. And the company, if a lot of people in the company didn't do it, they wouldn't actually, because that's not, you know, this flyer right here, the last one out there, wherever it is, right here, this 11-day, this is on their website. So a lot of people, a lot of loan officers, a lot of branches do this within the company.
I'm sorry, for the 11 days, what type of loans are those? Are they all the loans that you would have under?
Real good question. Thank you. I had that written in the notes and I didn't cover it. Those are going to be the agency direct. Those are going to be your conventional. Those are going to be your FHA. Don't think we're going to do that on a renovation type loan. That's not going to be on a non-QM, although I've closed one within 20 days on the I-10. Yeah, VAs close them super fast, but the problem is those appraisals. Those VA, or I can order a rush. Anytime we're doing these 11-day closings, I order rush appraisals. Get it done on a rush. I'll get them in 72 hours. I can't do that on a VA. They're going to take their own sweet time. And, you know, the more, you know, you're in a major metropolitan, you'll have more VA appraisers that can go do that. You're around a military base, you're going to have more VA appraisers that are readily available to go out there and do it quickly. You're going further out, you know, in the rurals, and there's one VA underwriter or appraiser that handles a 100-mile radius. Guess what? You're going to be waiting for that appraisal. I can't control that. So I kind of tuned down that 11-day on that, but I let them know, once again, we're subject to title and appraisal. You know, we may not get it done in 11 days, but all my client needs is title and appraisal. That's it. And that's why we won the offer. Probably the only reason. Especially if you got FHA clients, this comes super important.
Yeah.
Super, because,
Like them.
you know, for listings, you're going to take a conventional offer over an FHA
Everybody thinks
with
they're fine, they're not.
similar, you know, offer prices. You know, maybe if the FHA comes in $10,000 higher, you may think about it, but you also know the type of property, and you know that property is going to need scraping and painting. You know, is it worth $10,000 to your client to get that done? You know, depends. That's what a realtor is there for. So, well, once again, I want to thank everybody for being here. I was asked by our moderator to repeat my name again and my information. So, once again, at the conclusion, Joe Savino from American Financial Network, Regional Manager. Okay. Phone number 815-409-5450 for those that don't have my business cards or information here. 815-409-5450. Email, first initial, first name, J, last name Savino, S as in Sam, A as in Apple, V as in Victor, I-N-O, J Savino at AFNcorp.com.
Are they gonna get the information too?
Thank you, everyone. Yes, I can email that out. If you would like to, I'm going to ask everybody here for your business cards. I want to keep you in contact, let you know when anytime we get some updated programs or products. Here's the other thing. I'm here to help you guys. I would prefer to get the business, but you've got a client, they're having a rough time with their lender. Something doesn't seem right, call me up. And I can guarantee you, if I don't have the answer to your question right off the top of my head, a quick phone call away is one of the underwriters who actually does all of the renovation underwriting within the company. He's a quick phone call away from me. I have a cell phone. I probably talk to him at least once a day, you know, because there's still unique stuff that comes up all the time and with stuff changing. And I'll get you your answers right away.
Everything about.
Okay. So use me as a sounding board anytime you have any questions or whatnot. I'm here to help. I've known Adam and John for a long, long time. So I'm here to help them and their companies as well. Thank you.
Thank you.
Thanks, Joe.
Very informative.
Yes.
Thank you.
Good. I'm glad. Makes me happy.
Cards, I know they're in here.
I'm just gonna send you a picture of my car.
Yeah.